Hey guys, welcome to Deductible Consulting. We are a major consulting firm that we help people audit their business, set up businesses, we answer business questions, we help call center develop, help business develop, you name it, we do it. We not only give you information free of charge, but we show you how to get things done. And of course, on this YouTube channel, it's free. So don't forget to like, subscribe, comment, and share. Knowledge is power, so share this knowledge with someone who don't know. This video is entitled, What is a tax write-off and how does it work? I'm sure you hear of tax write-offs. You hear of the people who buy like the G-Wagon and then they're like, yay, I'm going to write it off. They have cars they write off. They have a lot of stuff that they write off. You know, it depends on the industry you're into where you can write off clothing, you can write off, shoes, you can write off a lot of stuff. It depends on what you use for your business. So let's get right into it. What is a write off? A tax deduction or tax write off is a deductible cost from your taxable income. You take the expense amount and deduct it from your taxable income. In a sense, tax write off allows you to pay a lower tax payment. So let's say, for example, you made $10,000, right? Yeah, for your business. However, you had to purchase office equipment. You have to purchase your clothing, which is quote unquote uniforms for work. You had to purchase, like equipment for work because there's a coffee maker that you needed, microwave stuff for work. You deduct those, and then let's say you have $1,000 remaining after that, then you would be taxed on $1,000. Tax write off. Everything else was written off. All right, so it's lower tax payment. And I'm sure right now you're like, wait a minute, I don't get it. Tell me more. No worries, let's go. Now, a write off is a business expense that is deducted for tax purposes. The cost of these items is deducted from revenue in order to decrease the total taxable revenue. Example of a write off is like your vehicle expense, rent, mortgage payments, and this is according to the IRS. This is not something that's made up. If you want the link to the IRS where you can actually see fully all the things that can be written off, email us at botcolabconsultant@gmail.com, or you can comment your email address and ask a question and we will send it to you. There are legitimate write-offs and it's not illegal. This is what the IRS says that you can do. And this is just one part of the video. I have two other videos similar that we're going to upload maybe a couple days from now or tomorrow. Watch all of them because it goes into details. If you own a small business, one of the easiest way to boost your profit is to make sure you're taking all the deductions you're entitled to on your tax return. Small business tax deductions or write-off are business-related expenses that you can subtract from your taxable income. According to the IRS, business expenses must be both ordinary and necessary to be considered deductible. For example, one of my Mercedes Benz, I use that to transport things back and forth for the company. That's necessary. The G-Wagon for the shipping company, I have to ship supplies out, so I use that as a vehicle for the company. It also has a banner that I can deduct. I can deduct that from my taxes. It's necessary. Then you have stuff that are ordinary stuff like your pens, your uniform, which is your clothing that you have to wear to work. It's you have to purchase clothes for that. That's ordinary and necessary. An expense is ordinary if it's common and accepted in your trade or business. Ordinary expenses, like for example, for those who do lip gloss, ordinary, the bottles you put the lip gloss in, the tubes that you put it in, mixing it, that's ordinary. An expense is necessary if it's helpful and appropriate to your business. What is helpful and appropriate for your business? That's the necessary. An expense generally doesn't have to be indispensable, however, in order to be considered necessary. Okay? Now, if you don't understand that, I'm leaving this slide up a little so you can read it. And again, email us and we can give you more information. Many types of qualified business expenses are specifically addressed on the tax return with a line to enter the deductible amount. Other qualified expenses can also be listed separately. So you have it on your return and then you can have a separate sheet. It doesn't all have to be on that one paper. You have a separate sheet that lists all of your other expenses. So it's a deduction. Now, whether you're just starting a tiny business or your business is already well established, here's a list of possible write offs. And I know right now you're like, could you just get to it? Tell me. Hey, it's coming. You have to first learn what a write off is before I can say, hey, here's a list for you to write off. You need to know what a write off is, correct? Now, advertising or promotion. The cost of advertising and promote your business is typically 100% deductible. This can include costs related to hiring someone to design a business logo, launching your website, buying ad space in print or online media, running a social media marketing campaign, or sponsoring an event. Like when you pay Instagram, to do the posts or whatever they call that. I normally don't use it. You have other people here that uses it. That's fine. When you pay Instagram for that, it's a write-off. They write it off on their taxes. Your car expenses, if you use your car for business activities such as driving to see a client or going to the store to buy office supply, the cost may be tax deductible as long as you keep track of the mileage. And if you email backlabconsulting@gmail.com, I can tell you where in the IRS website to find it. There's a certain amount per miles that you can write off. Okay, it's a cost per mile. Bad debt. Now, if you have loaned money to an employee, client, or supplier and it wasn't paid back, or if you made credit sales to customers that were never paid, you know how that goes. Sometimes a customer will pay you, some people do it. Sometimes a customer will pay you, let's say the item costs $35, they only paid you 30, you can write off the next $5. You can claim the outstanding debt. Okay? Business meals, if you take clients to meals or potential clients out for meals, you discuss business, you can write off that. The cost is 50% tax deductible. The snacks and meals you buy for your employees are typically 50% deductible. Food provided at company parties are 100% deductible. So let's say you were to have like a company event where you have like someone cater an event for you, you rent a building. Hey, 100% deductible. Your business insurance, 100% deductible. Your health insurance, workman's comp, liability property, 100% deductible. Okay? You can deduct that. Business loan interest. If you take out a loan for your business, the interest on that 100% deductible. That includes line of credit, mortgages, or business real estate. If you've used business credit card, the interest you pay on those loans may be 100% deductible. Now you have contractors, freelancers. If you hire independent contractors or freelancers for your business, you can also deduct their fees because you paid for it, correct? Look, I remember when we were doing the G Wagon, and people are like, who's going to pay for it? I am paying for it up front. I do pay for it, but you deduct those costs. It's deductible. Just like you paid $600 for somebody to design your business logo and your cards. Yeah, you paid for it, but now when it comes tax time, it's 100% deductible. Have you ever wondered, like, hey, how come this guy is a mega millionaire or a billionaire and he's getting money back from taxes and he didn't pay any? Because it's expenses. Now, do you run your office out of your home? You run your business out of your home? You may be able to deduct expenses to create and maintaining that workspace. Now, you generally have to utilize part of your home regularly and exclusively for business. For example, I have an office in my home, then we have two other offices that people use that live in the home. I also have an area where I do a lot of stuff remotely, that's 100% deductible. I have an outside office, deductible. The office does not need to be in a separate room, but it must be in a space solely designated to work and business operations. You can typically deduct home office expenses in one or two ways. Simplified, in which you multiply a specified rate by the square footage you use for your business, and regular, which involves you itemizing expenses for home office use, including mortgage interest, insurance, utilities, depreciation, so forth. Again, if you need more information, backcollabconsulting.com. We can help backcollabconsulting@gmail.com. Startup expenses. Now, if you started your business in the latest tax year, you may be able to write off up to $5,000 of the expenses you invested in launching your startup. The little money that you put in your business, you can get all that back, up to $5,000. Now we know $5,000 sometimes is a littler amount than that, a smaller amount than that. You may have done like $3,000, $2,000. Um, I know you're hearing my accent come out on the video, just ignore it. But you may have done like less money, but you can write off up to $5,000. Startup expenses generally include costs to buy the business, expenses related to marketing, travel, training, forming the corporation, the partnership, renovating a commercial space, the money you pay to the city to be legal, all that. It's deductible. Thank you so much for Bad Collab Consulting.